how much did I make? How much did so I think Ahmed's question here is how much did it take to make money in trading and be my full-time job? So it really depends on what route you're going to want to go. Okay, it depends on what route you're going to want to go. I think that for anybody out there right now, they can focus on becoming a consistently profitable trader and get funded. I think that's going to be the easiest route for a lot of people. There's a lot of individuals out there who will give you money to trade for them, and that is something that you can absolutely do in Forex and cryptocurrency with no license. And I think that for somebody who honestly and ethically wants to make an honest go of this, there are good places. And there are people like myself people who approach me who can show their track record of profitability. I do my best to put them in the right place at the right time. But those options are out there. All it takes is a little bit of research. For those of you who are interested in trading other markets, for example, there are easier entrances, for example, like Forex and Forex. There are pretty easy entrances. If you do well with Forex, of course, you can generally get sponsored by your company to go get your Series 7 license and trade commodities or equities as well. I think that's going to be the easiest route. And then you'd use your profits to trade cryptocurrency. So I think it's very, very easy for traders nowadays who approach the markets consistently to lock in 10 to 20% per year on Forex, equity, and commodity markets. In cryptocurrency, I've never had a year trading cryptocurrency where I've done less than 100%. And that's fairly consistent with just about everybody else that I know that trades cryptocurrency professionally as well. And so, to be quite honest with you, I think that you're going to want an account size of $50,000 to $100,000 if you're going to be living off of that. Again, very similar concept, though. I think that if your risk management is on point and you are being a little bit more active as a trader and you're limiting your downside, somebody with $5,000 to $10,000 can get that outsized exposure in a relatively short amount of years. As we kind of progress, I'm going to be making videos and walk through the exact math on how much money I think an individual needs to start trading. Again, getting funded is always good. But I think that for most people watching who don't have $50,000 to $100,000 sitting around, I think it's a matter of priority. If you don't have that money at all, then if you focus on becoming a consistently profitable trader, you can get funded with that amount of money. All right. If you have, and the way that we trade, the way that I trade anyways, and the way that I teach people to trade, like they don't need to spend a lot of time and energy trading. It takes some time and energy learning to do it. But then actively trading, like I don't trade that long. I generally actively trade for about 30 minutes a day. Now, that's cryptocurrency. Now, I trade other markets as well, so that takes a little bit more time out of my day as well. So overall, at my level, I will end up trading for about an hour to 2 hours a day. It depends on the day, depends on the market. But for cryptocurrency, it's very, very simple, at least the way that we trade. And I think that that's what's been most refreshing to members of the group and people who are learning to trade how we trade. But if for most people watching, I think, who are doing this on the side, we have to also remember the other thing. So there are this kind of falls into two categories. If you want to be a full-time professional trader and only trade, you can either get funded or you can work a job that you most likely don't like and save your money up for a year or two while you're learning to trade. And then you take that lily pad plunge. That's what I did, right? I worked as an HVAC supervisor to fund myself with capital so that I could do this on my own. It took me about 2 years, actually about closer to 3 years, to save up enough capital. And then I made the plunge to trading full time. And that was a forward-thinking life choice that I made because I knew what lifestyle I wanted to live. And then I've never looked back. Now, I could have gone the other route and got funded. I just chose not to. As far as that goes. The other thing is that a lot of individuals will enjoy their job, will want to continue working and have that active source of income and just trade passively on the side. And I think that's a great way for one to actively manage their portfolio. I think that, and me and Alex talked about this last night, with the economy the way that it is, with traditional markets the way that they are, we have gotten American investors and investors around the world, I believe, have gotten very, very, very spoiled with passive investment, index fund investing, right? Recently, there's news coming out about an index fund bubble, which I think is overheated, but again, still the concept is there. And this idea is kind of being paraded around that actively managed funds have been unable to beat the S&P 500 or index funds, passive investment, over the last 10 years. Warren Buffett's infamous bet. But here's the thing. If we are going to have a significant downturn in the market, your passive index fund investing is not going to do very well. And actively managed funds, and you as an individual who is actively managing their portfolio, whether it's your retirement account or your savings on the side, through the use of cryptocurrency, Forex, commodities, equities. And you don't have to, even as Americans, you can get involved with, for example, like the short S&P ETF, right? So that negatively tracks to a 1x ratio the S&P 500. So if you're looking to add something to your portfolio and you're concerned about the market, I'm not telling you to sell all your index funds. I have a fairly large dividend portfolio myself. That's one of my main sources of passive income. But you can start buying into the ETF of the S&P 500 negative and basically start hedging your account balance against the index funds, against the bullishness in the market. That's, a thing that I don't hear a lot of people talk about. So we're going to be entering into an era, I think, for, once the economy tips, where actively managed funds, people are going to be clamoring for them. And if you get in on that early, you're not going to have to sit there and watch a lot of your wealth disappear overnight when the market crashes, right? It doesn't matter where your money is. Doesn't matter, throwing your money all in gold is not a good idea. Throwing all of your money into Bitcoin is not a good idea. Throwing all of your money into index funds is not a good idea. Being diversified and being in control of your own portfolio to manage, to weather the storm and come out ahead where others scream, even if you just preserve your capital. Like say you take somebody like myself, who has a significant amount of money in the market at any given time. If there's a big market drop and a lot of people just lose 30, 40, 50% of their account pretty much overnight, and I don't lose anything, even if I don't profit, I'm still up 50% on the rest of the market. And now I can use my buying power at these depressed prices to grab killer deals, right? To buy up some real estate, to buy up some ETFs, to buy up some index funds, to buy up some cheap Bitcoin, to buy up some cheap gold, whatever happens to crash, right? And I think that's that mindset of actively controlling your retirement, of controlling your investments, of controlling your life, of controlling your money is the big breakthrough mentality, is the big aha moment, and was for me.